Every year, millions of people overpay their taxes without even realizing it. So in this video, my AI assistant Tiara and I will walk you through these simple strategies to help you save thousands of dollars, including overlooked deductions and insider tax saving tips that you probably don't know. And I'll also be revealing the #1 mistake that most people make that guarantees they pay more than they actually have to. So to begin, Tiara, what would you like us to focus on first?
I think we should discuss pre-tax contributions first.
Okay, fair enough. So this is where we'll kind of uncover some sneaky ways to keep more money in your pocket before Uncle Sam even gets a chance to look at it. And we'll start with the heavy hitter. This is your 401k account. So if your job offers one, it's one of the best methods of tax savings. Every dollar you put into your 401k reduces your taxable income for the year. So as an example, if you make $50,000 and contribute $5,000 to your 401k, you're only taxed on $45,000. So by giving yourself $5,000 in your 401k, you now actually save $885 in federal income taxes. Not a bad deal. Now, if you don't have a 401k or want to save even more, you can say hello to a traditional IRA. It works similarly. It lets you deduct your contributions from your taxable income up to certain limits. But don't forget also about a health savings account, or what they call an HSA.
An HSA? Perfect for when you want to pay for your hangover remedies with tax-free money. Cheers to that.
Okay, so not exactly what I was thinking, Tiara, but you aren't really wrong either. Anyways, with these, you can contribute pre-tax money. It grows tax-free, and you can withdraw it tax-free for medical and usually dental expenses as well. Now, when I was a single guy, I never cared much about this, but now that I'm married with 2 kids, this has quickly become a very high priority for me. So I personally like to focus more on a dependent care flexible savings account, or DCFSA. The reason? Well, this account, it lets you set aside up to $5,000 per year of your pre-tax income to cover eligible dependent care expenses. We're talking about things like daycare, after-school programs, or even adult daycare for elderly parents if that's something that you're dealing with. All right, we've covered how to shrink your taxable income up front, but what if I told you that there's a way to slash your tax bill even further?
There definitely is. Let's focus now on deductions and credits.
Perfect. So that sounds good to me. First things first, let's break this down simply. Deductions and credits are similar to if you were shopping at an IRS retail store. So deductions are like getting a discount on your income before the cashier rings you up, while credits are more like gift cards that you can use at checkout. Both are awesome, but they serve kind of different purposes. So first, let's focus on the standard deduction. So for 2025, single filers get $15,000, married couples filing jointly get $30,000, and heads of household get $22,500.
This is the simplest way to do your taxes, but it's not always the right way.
And Tiara, you said it right. So if you've got a ton of expenses, you might want to itemize your taxes instead, as it's much more likely to save you more money. So here we're talking about things like your mortgage interest that you pay throughout the year, donations to your favorite charities, state and local taxes, but only up to $10,000 for that one, and medical bills if they're more than 7.5% of your income.
Deductions are great, but credits are where you can really save some money.
This is absolutely true, and the government is actually pretty generous with their credits if you know how to take advantage of them. So first up, we've got the child tax credit. So this little gem, it can put up to $2,000 back into your pocket for each kid that you have under 17. But here's the sweet part. As of right now, up to $1,700 of that is refundable. So that means that even if you don't owe taxes, you could still get some cash back. And we all know that it's not too often that the federal government cuts you a check, so take advantage of it if it applies to you. Next, let's talk about the earned income tax credit. So this one's a real game changer for folks who work but aren't really making a ton of money. So depending on your situation, you could get anywhere between $632 all the way up to $7,830. And the best part is that this is fully refundable as well. Now you do have to make slightly under $67,000 if you're married, and just under $60,000 if you're single to qualify for this. But you can look up more details on the internet if that sounds like it might be a good fit for you and you're kind of in that, income threshold. Now, for all you students out there, or even the parents that are footing the bill, this one is for you. So the American Opportunity Tax Credit is your new best friend. It's worth up to $2,500 per eligible student for the first 4 years of higher education. And up to $1,000 of that is refundable just for going to school. And if you're juggling work and childcare, the Child and Dependent Care Credit might just be your secret weapon. So this credit, it can cover up to 35% of $3,000 in expenses for one dependent or $6,000 for 2 or more. This one is not refundable, but it can still take a big bite out of your tax bill if you qualify. These last two are really focused on helping those who are considering going green and environmentally friendly, if you will. So the Residential Clean Energy Credit allows you to get a credit of 30% of the cost of solar panels, wind turbines, or even geothermal heat pumps. And finally, for all you electric car enthusiasts, the Electric Vehicle Tax Credit could put up to $7,500 back into your pocket when you buy a new EV, or up to $4,000 for a used one.
Now you've got deductions and credits on your side, but what about your investments?
The next step is making sure that your capital gains and losses work in your favor. Rich people, they do these things all the time, so you're definitely going to want to pay attention to this section. Here we're talking about tax-efficient investment tips and managing those, annoying capital gains and losses. So first up, let's chat about tax-efficient investing. So one way to do this is by choosing investments that are naturally tax-friendly. So for example, index funds and ETFs, they don't really change their holdings very often, so they don't create many taxable events. Next is municipal bonds. So these bad boys, they're pretty cool, and they have a very unique perk because the interest that you earn is often free from federal taxes, and sometimes even, state and local taxes too. Now, needless to say, it's not easy to find a way to make money without the government taxing you to death. So this is actually pretty cool. Now let's take a second to talk about asset location. So the goal is to put investments that might grow a lot or pay dividends, like individual stocks, into tax advantaged accounts, like your 401k, your IRA. And then keep your more tax efficient investments, like index funds, in your regular custodial taxable accounts. By doing this smart organizing, you can potentially save on taxes and boost your overall returns. So one pro tip with capital gains too, watch for those holding periods. So if you've held an investment for almost a year, it might actually be worth waiting a little bit longer to sell. And the reason is because long-term capital gains, or investments that you've held for more than a year, they're always taxed at a lower rate than the short-term ones. So make sure that you look at your holding periods to see the right decision there.
All right, now that we've got your investments sorted out, let's round out the tax-saving ideas with some quick hacks.
All right, time for me to do some rapid-fire ideas, right? So first up, keep your receipts that you're getting your tax credits for. Whether it's for business expenses, charitable donations, or medical costs, good records, they can really save you big time if the IRS ever comes knocking for an audit, which they just may do. Next, don't forget about often overlooked deductions. Things like job search expenses, moving costs for a new job, or even student loan interest can all potentially lower your tax bill. Now, for all you side hustlers out there, remember to pay your estimated taxes quarterly. It's like kind of paying your dues as you go rather than getting hit with a big bill at the end of the year during tax time. And speaking from experience of paying my own quarterly taxes for like the last 10 years, this really does make tax time a whole lot less stressful for you.
Quarterly taxes? Because humans just love voluntarily handing over their earnings to the government. Such masochists.
All right, chill, Tiara. The IRS actually does require this, so we kind of have to do it. Now, I said in the intro I'd be revealing the #1 mistake that most people make that guarantees they pay more than they have to, and that is overpaying their taxes throughout the year. So this one is a biggie, and why most people should consider adjusting their withholdings. So if you got a huge refund last year, you're essentially giving the government an interest-free loan.
So you gave the government an interest-free loan? Brilliant move, Einstein. You might as well have set your money on fire for all the good it did you.
I'm sorry. She can be a bit rude at times, but she really isn't wrong. So instead of doing that again this year, tweak your W-4 to keep more money in your pocket throughout the year, and instead invest those funds even into a high yield savings account instead. Now, instead of letting the government collect interest, you can get your 3 to 4% on your money, and it's in a very safe place. Granted, you will have to pay the government at the end of the year because you'll be keeping more of your paycheck, but at least you'll keep something along the way by collecting interest that pays you instead of just letting the government do it. Now, one thing I want to point out is that your support for this channel, it really does mean for this channel. It really means everything to me, as I'm working hard to support my family of 4 with it. That said, if you think either of these videos seem interesting, please click on them and give them a watch so it signals to YouTube that my channel doesn't suck. I'd really appreciate it. But before you click, remember to always subscribe to unlock financial success one AI chat at a time. Thanks so much for your support.